Welcome to the Riskwiser Zone. I'm your host, Louis. It's great to have you joining us today as we delve into the fascinating world of finance and explore the latest developments that could impact your investments. As we always say, risk comes from not knowing what you're doing, so let's dive in and get informed. Today, we're focusing on a couple of compelling stories that highlight the evolving landscape of financial technology and its potential to reshape how assets are managed and traded. First off, we have an intriguing piece about blockchain technology and its ability to serve both institutional investors and underserved populations simultaneously. The concept revolves around tokenization, which essentially means converting ownership of real-world assets into digital tokens recorded on a blockchain. This innovation promises several advantages, including enhanced liquidity, 24/7 trading, faster settlements, fractional ownership, transparency, lower fees, and the automation of various processes through smart contracts. For instance, imagine being able to trade previously illiquid private assets with ease, or having access to portfolios that were once out of reach due to high investment minimums. However, as with any emerging technology, there are significant hurdles to overcome before tokenization can achieve widespread adoption. Regulatory uncertainty is a major challenge, with policymakers still in the process of writing rules and the risk that future administrations could reverse course. Custody concerns also loom large, with investors risking loss of access to assets if private keys are misplaced, and institutional-grade custody solutions still under development. Furthermore, vulnerabilities in smart contracts or blockchain platforms leave room for exploitation, and integrating this new technology with legacy financial infrastructure presents additional obstacles. These are crucial points to consider as we navigate the potential of tokenization to democratize access to financial markets. In another related story, Bank of America has weighed in on tokenization, highlighting its benefits but also cautioning about the risks involved. According to their report, while tokenization offers enhanced liquidity and other advantages over traditional structures, regulatory uncertainty, custody concerns, technological vulnerabilities, and integration challenges must be addressed. As we consider these developments, it's essential to maintain a balanced perspective, recognizing both the potential of tokenization to revolutionize financial markets and the hurdles that must be cleared. The goal, after all, is not just about adopting new technology for its own sake, but ensuring that it serves to enhance financial inclusion, efficiency, and stability. As we explore these themes further on the Riskwiser Zone, remember that our aim is always to provide you with insightful analysis and diverse perspectives to help you navigate the complex world of finance. So, stay tuned as we continue to dissect the latest news and trends that could impact your financial decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the latest developments in the world of finance and economics. In our previous segment, we explored the intricacies of market trends and their potential impact on your investments. Now, let's shift our focus to the current state of mortgage rates and the precious metals market. We've got a couple of interesting stories to share with you. Firstly, it appears that mortgage rates are hanging in the balance as the Bank of Canada prepares to make its next decision. This could have significant implications for home buyers and sellers, so we'll be keeping a close eye on how this unfolds. On the other hand, some experts are suggesting that the current housing market is so favorable to buyers that they can even sell their existing homes before buying a new one. We'll need to wait and see how this plays out, but it's certainly an interesting development. Meanwhile, in the world of precious metals, gold prices are hovering near record highs due to expectations of a U.S. rate cut. The recent jobs report showed weaker than expected growth, which has led many to believe that the Federal Reserve will decrease interest rates at its next meeting. This, in turn, has driven up the price of gold as investors seek safe haven assets. We'll continue to monitor this situation and provide updates as more information becomes available. It's also worth noting that the yen has weakened following the departure of Japan's prime minister, which has added to the uncertainty in global markets. The U.S. Federal Reserve's upcoming decision will likely have far-reaching consequences, and will be analyzing the potential effects on various asset classes. As we navigate these complex market dynamics, it's essential to remain informed and adapt to changing circumstances. We'll keep you up to date with the latest news and insights, so be sure to tune in regularly. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're closing out today's show with a look at the latest developments in the mortgage market. If you've been considering purchasing or refinancing a home, you'll want to stick around for this segment. We've got some good news for potential homeowners. Mortgage rates have plunged to an 11-month low, sparked by hopes of a Fed rate cut. According to Mortgage Daily News, the average rate on the 30-year fixed mortgage sank 16 basis points on Friday to 6.29%. This drop could be just what the housing market needs to heat up as we head into the fall season. But what does this mean for you? Well, if you're in the market for a new home or looking to refinance your current one, you may be able to secure a better interest rate than you would have just a few days ago. Many lenders are now quoting rates in the high 5% range, which could save you thousands of dollars over the life of your loan. Of course, it's essential to keep in mind that mortgage rates can fluctuate rapidly, so it's crucial to stay informed and work with a reputable lender to get the best deal possible. Additionally, while lower interest rates can make homes more affordable, they can also lead to increased demand and higher prices in some areas. It's also worth noting that home equity lines of credit, or HELOCs, are another option for homeowners looking to tap into their home's value. With a HELOC, you can borrow money using your home as collateral, often at a lower interest rate than other types of loans. However, be sure to carefully review the terms and conditions of any HELOC before signing on the dotted line. In conclusion, the recent drop in mortgage rates is certainly welcome news for the housing market, but it's essential to approach any financial decision with caution and careful consideration. Whether you're a seasoned homeowner or a first-time buyer, it's crucial to do your research, work with reputable professionals, and make informed decisions that align with your long-term financial goals. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.